Good day. This is your European Open briefing for Wednesday, 14th of September 2016. My name is Michael Florentiades. I'm the chief economist here at xm.com, and these are the key points you should know about today. The yen dropped severely on reports that the Bank of Japan may cut deeper into negative territory. The pound stabilized after a drop versus the euro and the dollar ahead of today's employment data. Generally, there is a risk of mood in the markets, weak oil prices, rebounding a little, of course, on American Petroleum Institute's smaller than expected stocks build. The Aussie is below 75 cents versus the US dollar, something that is related to risk appetite and commodities. And the calendar is relatively quiet except for UK employment, of course, and maybe Eurozone industrial production presenting a little interest. So we had reports in the Nikkei Business Daily that the Bank of Japan will make negative rates the main instrument in its fight against deflation. This was not good news for the yen and bad news for Japanese stocks also, because this policy is seen as a little problematic. It is hitting bank earnings, and negative rates certainly are controversial. For example, UK and US authorities are not keen on the idea, while the Eurozone and Japan are trying them out. And here is also euro versus yen, also strong despite negative risk sentiment. Now, this pair used to be a proxy for risk appetite, but this has come into question lately, as have gold's safe haven characteristics, by the way. It dipped below 1320 for yesterday, while stocks were having a very bad day. US stocks were falling more than major indices were falling more than 1%, and gold was also lower. Now, euro dollar is relatively quiet, so why show the chart then if nothing is happening? Well, this is to show that the declines in the yen, the pound, and the Aussie are signaling developments, mostly developments in these specific currencies rather than US dollar strength, because if it was a case of US dollar strength, we would have seen the euro going down significantly against the dollar as well. Now, the euro peaked versus the pound at around 85.3 pence, has come back to around 85 pence. You see some heavy losses for the pound in the previous day, but again we say some stability now. This is a very key week for the pound. We expect lots of volatility with the employment report today and the Bank of England meeting tomorrow, as well as retail sales. Now this chart is showing that the rise in bond yields has continued today, so we see that maybe markets believe that central banks are reaching the limits of what they can reasonably do, because maybe they can throw money out of a helicopter, but this is not something that you would expect to happen anytime soon. Serious barriers to that. So you see the 10-year US yield, government bond, yielding more than 1.7% now, and the German Bund is in positive territory at 5.8 basis points, but it's very interesting to watch both of them rising in lockstep. That's an interesting relationship between the German and US rates. Higher yielding assets are also under threat if there is a perception that there's not as much liquidity will be pumped into markets. This leads to a risk of negative risk appetite. Maybe central bank powers have limits, they are not omnipotent, and also the commodity sell-off. All these factors are hurting the Aussie, it seems, which is trading below 75 cents versus the US dollar. Finally, on the calendar, we had a wider than expected current account for New Zealand. What happened there is residents chose to travel and spend. Good for them. This did not affect the Kiwi much. Japanese industrial production was revised to negative from flat for July. There was a miss in French inflation numbers, slightly lower, and on the month-on-month figures. And as we said, we have the UK employment data, unemployment to come steady at 4.9%, earnings growth to decelerate a little, and the claimant count to rise a bit during August. And there were also some reports that Brexit uncertainty could impact key sectors in terms of fewer jobs created. That's certainly true, for example, in financial services. Later, we will get Eurozone industrial production expected to look ugly during July, with a 0.9% fall month-on-month and 0.7% fall year-on-year. Not much else for the remainder of the day, just Energy Information Agency oil inventories, and a big build is expected in crude oil stocks, so expected to add around 3.8 million barrels. And tomorrow, we have New Zealand GDP, and we also have Australian employment numbers. That's all from me today. Thank you very much for watching and have a great day.